In this video, guys, we'll look at the US economy. Hey traders and investors, a warm welcome to you. So I'm going to spend a little bit of time in this video. Let's keep it short, but I'm looking at the facts of the US economy, some numbers, some areas of import, some areas of export, sectors, etc., and also some snippets from articles online from economists who are far more qualified than me to talk with authority about the economy. But from a trader's perspective, myself and you, it gives us a good idea of where the money is coming from, potentially where the vulnerabilities are, where the growth is, and we can look and see and potentially form trade ideas from that. So with that in mind, let's go. Okay, so the US economy is the biggest in the world. 2017 GDP was 19.39 trillion. Hefty. 24.3% of the world economy was driven by the US. And to show the kind of giant status it's got, even just California, if you took that, that is producing more than the UK. So it's a big, good engine of the world. Population 324 million. It's probably gone up a little bit since then. Since we had this, it's rising every day. GDP per capita of $59,500. Pretty impressive. Okay, so let's look at the exports now. So US getting much better at fracking in terms of extracting oil from their ground, so they're less reliant on crude oil for imports. So what does that mean is they've got maybe a little bit of a surplus of the refined products that come out of the cracking process of cracking that crude oil, so exporting a lot of that. Exporting cars, of course, they're a big car manufacturer. A lot of other countries like American vehicles, trucks and that kind of stuff. Planes as well, of course. We've got Boeing, one of the big manufacturers of planes in the world, and then gas turbines. So destinations for these, or top three destinations for these exports, are Canada and Mexico. Northern border, southern border makes perfect sense. Across the border, there's no friction there. And of course China, who's got a big demand for all this stuff, growing massively all the time, and it's just got a big desire for goods, especially American made goods. So let's look at the imports now. Imports of cars. You might be saying, well, they're exporting cars. Why are they importing cars? Of course, if you're from the States, or if you've been to the States, you know that there's a big mix. You've got the local domestic vehicles, and then you've got the imports, the Japanese imports like Honda and Toyota and that kind of stuff. And then of course from the German aspect, you've got Audi, BMW, and Mercedes was the other one that was on my mind, which is Daimler. So those are the cars that are coming in. Then we also have a crude oil imports. Of course, they still have a net import at the moment of crude oil requirements, and things like computers and medicaments. So medicaments are bulk agents, if you like, for medicine. So they aren't actually the final retail packaging or dose that you get. So they'll get this bulk product in, and for want of a better word, it's probably a more technical term than this, they'll mix it up. They'll put it into pills, put it into those blister packs, add the dosage, all those things, and then that's the actual medicine that's presented to the end consumer. But those are the bulk ingredients that go into that. They come from places like China, Mexico, and Canada. See a bit of a theme here. It's like they take my stuff, I'll take your stuff, everybody's happy. So that works quite well. Currency, of course, is the United States dollar. Stock exchanges are New York Stock Exchange and the Nasdaq. Now, the Nasdaq is the National Association for Securities, and I never remember what the last bit is. It's something like derivatives. Let's have a look because I've got it here. Why not cheat? The National Association of Securities Dealers Automated Quotation System. Oh idea why they make it so hard. Nasdaq sounds way cooler, right? But anyway, that's what the Nasdaq stands for. I should know that really for trading for such a long time. But anyway, major indices: S&P 500, Dow 30, and the Nasdaq. Let's look at some information, final information that's quite useful. Dominated by the services sector, with 80% of the GDP is coming from the services sector. Regardless of that, they're still one of the biggest manufacturers in the world. Experts obviously in aerospace, of course, military equipment as well, a big spender for military. Economy's been pretty steady, chugging nicely. They've been outperforming us in the UK and the Eurozone. Our real estate, financial services, insurance services, all doing nicely. There's a bit of an issue at the moment with the trade war between US and China, which will have to play out depending on when you're watching it. It might have already played out or not. And of course, the election of Donald Trump back in 2016, you've never seen a big focus on are the tax system, you know, trying to slash the red tape, the trade policies, like I say, with China and Eurozone and all the other things. So US economy, pretty hefty, pretty sizable, massive, massive, massive engine for the global economy. Really important how this does. If this starts to struggle, the whole world will potentially slow down. So some information there. Pretty useful stuff potentially, depending on where you're considering investing or trading. See you in the next one. Take care, guys. Bye-bye.